Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today's May 3rd, 2019, and today is Friday morning. It's the first Friday of the month, which means that we have NFP coming out later today, 2:30 South African time. And this is on the back of a really crazy week of economic data that's come out, including consumer confidence, two major earning reports from major companies, including Google and Apple. We also had the FOMC, and yesterday we had a bank rate vote from United Kingdom, and this is the last of the major economic data that's coming out this week. So it should be kind of interesting if the market continues going in the direction that it has, because it has made some correction, or it's going to pivot it to another direction. We'll take a look at that later today. Also, you do want to know that the ISM non-manufacturing PMI number coming out of the United States. Now, in terms of this number, it kind of shadows in relation to the non-farm payroll. However, if there are any surprises, you do want to know that it's coming out. Okay, so just be sure to know that that number is also coming out at the end of the trading day at 4 o'clock South African time. Now, looking at the markets, Aussie dollar on major support right now. Now, it's made a interesting sell-off, okay, out of the three, the euro, the GBP, and the Aussie being the weakest, and it's back on major support on the lower support. We're going to take a look at that. If it does break, then it's really essential. Looking at the indices, the Dow Jones bounces off of second support, really sold off sharply from our 26,600-ish level, and then finally bouncing off of 100. We're trading just above that just now, okay, which is kind of indicative of what's been going on in the market, okay. Lastly, looking at commodities and stocks, gold back on support at 1270, and all trades much lower, breaking that support as well in tandem with the Dow Jones. Okay, we're back to trading oil and the Dow Jones together. Now, lastly, looking at the stocks, Google had a gap down, and it looks like it's a gap and go. Okay, it's a gap down and it's selling off continue. Let's look at that later today. So let's see what we could expect from today's trading.
This conference will now be recorded.
Okay, so we're looking here at the Aussie USD on a daily chart. Okay, you can see right there, that's a daily chart. And you can see that we've been trading pretty much in this area between 72 and 70-ish level since our debacle from the previous year. Okay, we've been selling off quite sharply from last year into this year, and we've been kind of trading just sideways. Okay, the Australian economy is kind of soft right now. Real estate market is also soft. So we're seeing a little bit of a rotation there in the Australian dollar versus the USD, and you could see that we're right there at the bottom of the range. Now, we've tested this 3 times, and this may really test itself again on the bottom right here, and it may break even lower. So this is something you got to keep an eye on later today. If it does breach this support level, it may even continue back down to the 69-ish, 68-ish level. Now, to see where we've been before, okay, this is a weekly chart. Okay, so this is going back to 2015, and in 2015 we traded as low as 68.40-ish level. So if it does breach this level, this is really important. Now let's look at a 4-hour chart just to give you a perspective of it. It is making that double bottom here, so let's see if it does break it. It looks like it's breaching it right now, just slightly. I wouldn't go very aggressive into this. I would build my position slowly just to make sure, because it may still bounce, okay, around this area. But a very important area for the Aussie USD. Now, jumping into gold, we're right there at 1270. Okay, nothing to really write home about. Okay, I would have expected it to bounce a little bit sharper with the fact that the Dow Jones sold off. But the real player is oil. Okay, oil bounced back to this resistance of 64.61, and sure enough, made a downwards momentum even back to the 61.76-ish area. Now, if you look at this, this is a pretty much a classical head and shoulders. There's one head, there's the one shoulder, excuse me, and the second shoulder, and this is really a bearish formation. Okay, so we're testing this low 61.75. This is a Fibonacci level that we have up. Okay, it was one of our higher Fibonacci levels. We breached it and then bounced off a minor support at 60.98, and we're just right there trading on that Fibonacci level. But let's check out that Fibonacci level a little bit clearer, so we see where we're trading. Okay, that's a little bit clearer there between our high of 76 and our low of 42. So it's on that range right there. So I do expect it to bounce off of this area of 61.70-ish level, But if it doesn't, then that means that we could breach it further down to the 58.93-ish level, okay, which is important, okay? Price of oil really affects the entire economy, inflation, so on and so forth. So really important to keep an eye on that. Now, looking at the Dow Jones, this was the massive sell-off we had for the last 2 days from 26,660-ish level down to 26,100-ish level. It's pairing about a 500 point move in the last 2 days. Okay, so this was really a setup for it. You know, the markets, and this is really classical that we go into a number, the FOMC, everything looks like it's going to break out, and sure enough, at resistance we sell off, and this was a case in point. Okay, now looking at this right now, we're just barely bouncing off of the lower limit here at 26,138. We're at 26,200-ish level. It's really hard to say because we've got a mixed bag of stocks right now, and there are some stocks that are really strong and some stocks that are still faltering. Okay, so if we're looking at something like Google, which I mentioned before, which we had a gap down, as you could see here, okay, and look at a 4-hour chart that's a little bit clearer. You had a gap down, and then we continued to sell off to this 1156-ish level. Now, this is a previous resistance level, okay, subsequent support. So I do think that this is really an important level for it to sustain if it does, you know, maintain this area and not break lower. Okay, if it doesn't break lower, then we may see it actually bounce and possibly be a catalyst to closing up the gap, which has happened. Okay, this is really, you know, for those that have been trading for a long time, will notice that, you know, in these type of situation, you know, the market kind of sells off and then replenish itself afterwards because people are booking profits. Okay, so got to really be careful here and not bet that it's going to go back down to $900 a share. Okay, because that's not realistic, especially in this type of case. Now, if we look at Facebook, it's still strong. Okay, 191. If we look at Microsoft and Apple, they're still pretty strong. What is not strong is our B2B all-time kind of business, ALCOA. As you can see here, we breached that previous support earlier this week, which was your telltale sign that the markets were going to sell off. But we're on that lower limit, okay, at 25.47, but we haven't breached it. Okay, so relatively, this is not a wild stock. It's not a stock that trades, you know, with tremendous amount of volatility, but it is a bellwether. It is one that we look to for some direction in the market. So if it does stabilize here, we could see that the Dow Jones will stabilize as well as we go into the summer months. This is Fred Razak. I want to wish you guys a great trading day. Thank you.